here, guys, I think you did very well. All of you started with that investment property question then. You won't. Let me say rather not say you won't. You never know. I don't set the exam. But if really I want to have everyone passing, is to have a good 10 to 15 marks of investment property there. But it shouldn't be a shock. Like, for instance, when they start telling you that Mr. X is going to do that valuation and date, all that you do, you take that thing and copy it back in your note, because you need that information when this valuation was done, blah, blah, blah. Easy like that, you get those marks. Then you do that easy calculation, which all of you manage to get that journal entry. So we need to be able, you should be able to define what this investment property is, how you're going to differentiate it from the owner-occupied property. When you see the owner-occupied property, remember that note 6 I had there. It simply means PPE. And then in rare circumstances, if you had to work for the property that like those are invested in JSE, those that deals with leases, so the property becomes an inventory to them rather than that. So you'll account it with IS2 there. And then they describe an accounting of the accounting treatment to investment property. It follows what we did in IS2, what I've introduced in IS16. And then, yeah, we should get into that. Finally, we need to properly disclose. I was counting that that part that say when you disclose, don't leave that information out just after the end of your note, where it talks with that investment property. I think the first class exercise you did, where you were doing that note, you needed that information. Next year, you're gonna probably be adding the tax implication when it gets into that. All right, recall what we did in Learning Unit 2 on the conceptual framework, the definition of elements of financial statement. It will fall under A on the asset. So we'll deal it the way we'll deal with that. Recognition will follow what we did in PPE, what we did in IS2. Measurement, we need to be able to get into that. They normally will tell you how you went about it. And then from there, you take all those elements. If it was done like the cost, the way we determine the cost of a PPE, or the way that we determine the cost of an investment property. So all these categories of assets, they follow the same method. Hence, I keep bringing this up. Once you're comfortable with definition, you move to recognition. Can this be an asset? Once it thumbs up, you say, great. How do I measure it? We'll get into that right now. And lastly, the presentation. So you guys exactly have doing a lot of presentation on this investment property, where you show that one asset, say, oh, now it's an investment property, or you can move one PPE and then move next to the investment property. You do that disclosure, you provide the details, especially when the evaluator was involved. Don't forget that mark. Should also take about 30 to a minute to write that one down. So rewriting something that is in the question paper back in that. The recognition, you're most likely going to be dealing with the recognition once you move to your third year mostly, where the derecognition happens exactly when I'm moving one from investment property, changing the use now to become the PPE, or vice versa. That derecognition element take place there. Right, let's get to it. The definition. Investment property is the property, normally it will include land and building, so with that example, or part of the building, or both, that can be held by the owner. Remember, it is that one that was falling under BEL in that example. I think we also did the COVID example. In third year, they could push you now further to say, let's test you on that element of what if it's done by the leasee under the finance lease. Eventually, you'll move with it when you're doing to earn rentals or for capital appreciation. Currently, I think you guys focusing on capital appreciation. It could bring the element of earning rentals. Imagine you've got investment property, which is sole mandate being earning rentals. On top of that, you've got a lease question. I think if you're not exam fit now, you'll think that it's fire. But that is what you should be able to handle probably next year. I could be very rude if I bring it up in an exam now, because the pass rate won't be too great if I combine all of that and have that lease being a killer question with investment property and debt. But it can be done. It's an exam. For capital appreciation of what, or rather than for using the production of goods or administrative purpose or selling the ordinary course of business. Whereas when we dealt with the PPE, remember it's owner occupied property. So in that exam or that exercise we're doing last week, so your mind should have said, oh, this is an owner occupied, meaning it's a PPE. Then you start to relax. See, but I can handle IS16. I don't have a problem with it. We've defined that what it is. It's a property that is held, could be by the owner or by the lessee under the finance lease for the use in the production or supply of goods or services. The fair value. Remember, I've touched on the issue of the fair value. We also looked at that revaluation purpose. So basically, the fair value, it's what you could be able to get at the market. And I move to number B on recognition. It says, IP, it shall be recognized as an asset. Normally, they all guide the same way. If and only if you're expecting the future economic benefits associated with that particular item to flow to the entity. And then when you get into that, also as part of the requirement, the cost of that item can reliably be measured. So you also need that. Cost incurred initially to acquire that investment property. We'll touch that on IS16 to see how to get into the cost element of it. Importantly, at measurement, they'll tell you, I think in that example, they told us how much they bought it for. We said, cool. Then 29 June came that person, did that revaluation to say, hang on, it was no longer, I think it was 800 or 850, one of the two examples, or 1 million or 1.5. Then once it went up, that is where you're moving now from recognition. So you're at the subsequent. So initially, all that you need to do, can you capitalize it? If the answer is yes, you bring it up into your books. Probably it must have been sitting with the other as the opening balance in that other example, or you bring it as your additions if it happens during the year. When exactly? Exactly on the date it was acquired, you just check where am I with my financials. At what amount? The one that you initially bought it could have been your opening balance, or alternatively, you'll say, hang on, this is what I'm buying it maybe in the middle of the year. You bring it at that cost. So that initial, that measurement, that recognition, basically, you just look at that. Can I bring it up? At what cost? We covered this. What could be included, what could be excluded. So once you've covered the IS16, you don't have to repeat yourself with determining all these elements. They look more or less the same. Just be able, once they start bringing the VAT, remember VAT has nothing to do with you in a business. It's not part of your cost. So it's normally needs to be excluded. We need to have that provided you are a VAT vendor. Hey, how do I recognize it? Because I'm bringing the asset, my asset needs to go up. Learning Unit 2 told me that if I've got the elements of financial statement, my asset increase on the debit side and then they decrease on the credit side. So that's part of the classification that we need to get it. Where it will go, it's a separate line item from your PPE. Note that. Whereas with the PPE, I don't combine them. I'm just showing it separately there as well. Depends how did I bought it, cash or on credit. Subsequent, that's what you do at year end when that date that person came to push it at 850 or that 1.5 million that we did with COVID. It is a fair value model. Remember that accounting policy that was sitting and where was I? I think item number 6 there. Saying thumbs up. It's not the revaluation model. So remember what they were doing in that policy, or what is the part that maybe you couldn't understand then. They're saying is when that valuator it's doing that revaluation is trying to bring this cost to be as close as to the fair value. So that will be your cost modeling. So those are becoming the accounting policies. Hence that reading, when I say from the required, you need to actually always read the two preceding bullets. It could be additional information. It's got that information. Remember, number 5 had all the depreciation rates because you need to carry them on, because if I were you, what I would do, I will look at number 5. As I was going to the trial balance, I write those depreciation. I think there was 2% on a straight line method. There was another 20% on straight line method, and another 20% on a reducing balance. I think it was for M&E, machinery and equipment. Then you say, happy people, you've got the rates, you scratch it out. So once you've read something, that's another exam taking must bring. That item number 5, you need to cancel it out. You've dealt with it. Remember when we did, to those that did not join the class after 7, we went on to say how will I have approached it. I started with number 4 because I said, let's start getting the marks. Then we moved to number 1. What we didn't do was 2 and 3, which will be part and parcel of today. Cost model, is that what we've described under the IS 16. What I did there, how you do with that. If you're looking at my X0 being my year end, that could have been either at 800,000, but they told me that at year end, on the Bella example, it went to X1, that could have been 850. So when the value goes up, if I'm dealing with the owner occupied, it becomes the OCI, that other comprehensive income. Whereas if I'm dealing with investment property, if I'm moving from X year 0 going to X1, it's going to be accounted as a fair value adjustment in the investment property. Okay, so what I'm trying to say there, if now in year 2 the value drops down, if the value drops down from X1 to X2, X2 is below the carrying amount, you needed to either start by using up that OCI there, and then the excess of it. That example that I did, if we were to move from 850 to say now 790, we will use up that OCI as a reversal and get to X2. That extra 10,000 will be accounted as a loss in the profit and loss statement. So you need to check your movement. So this is one way you can demonstrate your calculation to say from carrying amount, if I'm going up, it's either it's revaluation or investment property, everything goes then. But with investment property, it will go to fair value, whereas with investment property, it goes to profit and loss. You need to ask questions now, because that could be confusing.
I just need to get to the question paper. Just hold on for me. You carry on explaining. Oh.
That's all right. I'm trying not to leave you far behind so that you can concentrate nicely with the figures there.
So I understand that. I just want to explain what to explain here. With the
it needs those numbers and these numbers. Hence, I want you to do that. It will make much more sense. How much was that?
Says it was 800,000. Then it
that's fine. Let's park it there. Let's move slow. So this is where you'll park. There's that X0.
Okay.
You equal that 800. That is the carrying amount by them.
Yeah. All right.
Then they said it went up to how much?
850,000. Okay.
When you look at my diagram there, that 850 meaning will be the year up, X1.
Yes, okay. So
the arrow is going up.
Okay.
Was it an investment property or property, plant and equipment? That's your next question after that. If it's property, plant and equipment, the excess between 850 and 800, where does it go?
It's a revaluation. It would be the 50,000 of the revaluation is increasing, right?
It's increasing. Hence, I've got that OCI there. Can you see that between X0 and X1, your 800 and 850?
Yes.
You've got that. So let's check this scenario. If it was an investment property with the same amount, where will I take that?
It's an asset, so...
Now, if it was an investment property.
So So we're going to take it out of plant prop and move it to investment because we're getting rentals there, right? So it can,
No, we're not moving. Just listen one more time.
yeah.
I'm saying now that land is a property, plant and equipment. Now we're changing that. That is no longer property, plant and equipment, but is PPE. I'm saying that movement between 800 and 850, where do you account it?
I think I need help from someone in the class.
Yes, that's that. Note that. It's all right. You're almost there. It goes to investment property. It goes to, I mean, it's a fair value adjustment. So it goes to profit and loss.
Profit and loss. Okay.
If it's investment property.
Okay.
You happy now?
Yeah.
That's what I was explaining. I'm saying now we're moving from that 850. Can you see X there on my diagram? Please mute the others. Can you see the X0? It's below that 800. X2.
Yes.
Now the value is no longer 850. So for some funny weird reasons, it's 790. Can you see 790? It's below 800. So I need to go down where it says lower value, X2 then.
All right. Yeah.
You see that?
Mm-hmm.
So what is the difference? Now you're comparing, if you look at, on my left-hand side of the screen, you've moved from 850, you're going all the way down where the OCI, you bring the 850 back to 800. This is that 850 you had under the OCI earlier on. Can you see that?
Yeah.
But what is the difference between 790 and 850?
60,000.
60,000. But in the previous one, between X0 and X1, how much of your OCI are you having there?
50,000.
50,000. So meaning you're going to wipe that entire 50,000, but you still have another 10,000 to go. Can you see that?
Yes.
So that 10,000 is no longer accounted on the OCI because your OCI dropped down. Can you see the arrow on my left? It went down, so you'll push it up to 50. Then the excess of that, it's 10, it will go to profit and loss.
Okay.
That is what I was explaining if I'm putting the figures in. Thanks for bringing that one up.
Okay.
Is it much clearer now?
Yes. Yes, it is.
Thank you so much.
Thank you.
Whereas now, if it was an investment property, you don't do that entire process of OCI and PPL. That entire 60,000 go to, start by reversing it because it's now devaluation. So it goes down. The entries are there. Is a fair value adjustment, but going down with the negative signs.
Sorry, I'm completely lost. I don't understand. Where does the 850 come from? And the 50,000 and the 10,000. I can understand the logic behind moving up the arrow, moving down the arrow, but you have to have those figures to be able to stick them in somewhere. Or where do you find it? How do you recognize those figures?
You missed that part. Park a bit, missed the part. Say the part we did on a Thursday class. That's where we moved.
Okay, I was on the Thursday class. So my question to you is, which paper are you using for the information to fill this measurement?
Paper. Get this one right. You can use either of the two to plug the numbers to get the concept. Let's correct that one, because the other one I think was dealing with 1 million and 1.5. So I picked up the one that had 800 and 850. So I wouldn't know from top of my head which paper was it. But I was trying to put the numbers without even referring to the paper. Forget about the paper. But what we're saying is from X0, that is where you were at carrying amount. Now at year end, they are moving to 850. That is year one. I'm saying in year two, you're devaluing that amount from 850 to 790. So it doesn't have to be specifically from the paper. It's just to grab the number to understand the movement in the diagram. Forget about the paper. It's just,
yeah, you see, but I can't follow like this because if we get this question in the exam, how do we know what's the OC number? Does it say in the paper OCI number?
I think you're completely lost.
Yeah, no, I definitely am completely lost. I'm sorry, I'm not understanding this. And I actually do understand quite
Breathe in so that we get into that. we're saying at the beginning of the year, we've got 800. It could be any other number. Let's use 2 million at X1. Then if you look at the slide, I'm talking about property, plant and equipment. So meaning it will be a revaluation. So if that 2 million goes to 2.5 million is coming from Norway, it means the number is going up to 2.5 by extra 500K.
That's right. I understand that.
It needs to go to OCI. The upper movement goes to OCI. You happy with that?
Mr. Molefe, the 500,000 is going to go to the OCI.
Because you're using PPE.
Right.
Police.
Okay,
but
so
I'm saying,
if I understand you correctly, you buy a property for 850,000, you build it for 800 or a million, like you said, you build it for 1 million. Then you do a reevaluation a year later and it's gone up to 1.5.
Sure.
So that 500 is the measurement of the OCI. Is that what you're saying?
Correct.
Okay, I've got that. Thank you.
We're saying then in year 2, if now the value has gone further down, say now to 900, how do you account it?
Okay, so that's the part that I don't understand.
Now remember, when you've got an asset, you expected to use it for a longer period, more than 12 months.
Right.
So you will be doing your accounting every 12 months, basically.
Correct.
So we're saying now in year 2 that property is no longer 1.5, but it's 900,000.
Okay, so why did it get to 900? Did it drop because of the market value on the revaluation?
They will provide. Could be revaluation.
Okay, so it's not because it didn't drop because of depreciation, it dropped because of revaluation.
Evaluation.
Right. Okay, so then on this graph, where would that 900 fit?
Can you see it's below? Remember, initially you started with 1 million in your case.
And that's the carrying amount.
From the carrying amount.
0.
So it's 0. So now you went up first to 1.5. Can you see where X1 is?
Yes.
Can you see where X2 is?
Okay, so X2 would be the 900 now.
Yeah, X2 would be 900 now. Then you concentrate on the left side of that graph on how to account it now.
Okay, so where you've got the PL, is that where you would put your profit and loss of? But what would you work from the million figure, or would you work from the 1.5 figure, which was the previous year?
Let's park that there, correct.
Okay, all right. Thank you very much, Mr. Molefe.
Let me carry on from there. Now the property, initially you started with 1 million, you went to 1.5. How much was your OCI?
500. 500.
Now, correct. What is the difference in year 2? You're moving from 1.5 to 900. How much is the difference?
600,000.
But you can only utilize your OCI up to how much?
1 million.
No, 500.
Oh, 500. Okay.
Then you left with that extra 100.
Okay.
That will go to PL because you used up your OCI up to 500.
Sorry, did you say that will go to the PL? So that's your profit and loss.
Which one?
The 100.
The 100, because you don't have the capacity of carrying over 600 because you only have 500 available in OCI.
Okay, fantastic. Thank you. I've got that. Thank you very
much.
That. Yeah.
That graph, that's all that I'm trying to do that. So don't worry about that confusion of the figures. So once you get that, meaning you'll pick it up, the numbers I think will just come naturally.
Okay, thank you, Mr. Molefe.
Right, you've got that. So I think we've guys overcovered this. We should be sufficiently covered.
So, Mr. Molefe, would we see a graph like that in the question, in the exam?
No, it will be written in words.
Oh, okay. So
that is more like your calculation.
Okay, so when the question comes across to us in an exam, they'll word it instead of giving us a graph. So we won't have to guess from the graph how to do the journals.
Let's look at either of the past papers you've got in front of you.
I've got none in front of me, Mr. Molefe.
You've got none?
No, because I don't know which one should I have. I've only got the October, November.
Which year?
2020.
That is fine. I can't remember which one it is. But if you look at the figures, you start with the carrying amount. How much was the carrying amount of that particular land? They like revaluing land at UNISA.
Let me have a look here. It was assessment. So it had land at cost of 800,000, buildings at cost of 1.2.
And I think what are they accounting as a revaluation? Or
Yeah,
it could be
having a
both.
look. Accounting policy notes are not required. Prepare, no. Reevaluation. The newly constructed plant machinery, withdraw completely. Okay, no. I don't see where it says here the reevaluation unless
Must be additional information.
Yeah, so it says Bellcrest owns property in Germiston situated on stand. The land and buildings was acquired on 1st of August 2016. The building is depreciated over 20 years. Mr. Blogg, an experienced independent sworn appraiser, determined the fair value of the land obtained on the 1st of August 2016 to be 850 on 1st of October 2019.
Let's pack them. With the 850, look at the graph. Where you're going to go? Up or down? From carrying amount being 0, meaning 800?
Up.
Up. So that's how you're doing your calculations.
Okay,
this is more
fantastic.
For calculation.
All right. Yeah, right. Thank you very much for explaining that.
You're welcome. The class exercise we had to do the journals. This is how you'll go and deal with the journals when you've got revaluation. Because the objective here, let's just forget about the depreciation because the land does not depreciate. All I'm trying to do, if you look at my number 2, this plant was 800,000, meaning I'm reversing this 800,000 because that was at the beginning of the year. So you credit that plant and debit that green amount, number 3, the revalued land at 850. Can you see the difference?
Yes, so 3 and 4, revaluation surplus would be the 100,000 profit that you made?
No, if you look in the example, the one that you're reading.
Oh, okay, sorry.
Number 2, you'll have 800.
So number 3 will be 800 and number
2.
Oh, okay. Number 2 will be 800. Plant
it's a credit because you're trying to remove that 800 and then you want to bring your plant up. How do I bring my asset up? By a debit. Can you see that debit number 3? Plant revalued or land revalued at 850. Can you see that?
Yeah. So would that be the journal? We just ignore 0.1 here for matter of this
exercise. Yes, that would be the journal. But
okay,
now your journal, it's not balancing. Number 2, you've got 800. Number 3, you've got 850. Meaning to balance it, you need that credit of 50.
50, yeah.
So now your credit balance to the debit. So you credit revaluation surplus.
And that would be
credit. Down? Are you writing that down?
Yes, yes.
So you've got number 2, plant at cost, it's 800 credit. At year end, they gave you as 850 debit, plant now revalued is going up 850. You're saying, hang on, but my journal entries are not balancing there. Where is that 50? There's that 50 number 4. What do I call it? Revaluation surplus.
And that's a credit.
That's a credit because it goes to OCI.
Okay.
Everyone happy? Did we get this mark in the journals? Let's start with. Did you get the journals right?
No.
Where are you lost?
Okay, to account them, the 800, where does it go? And then the 50 revaluation surplus. I didn't get that.
Was it me disappearing or you just decided to freeze the body? I said on number 2, remember what you're saying now. If you look at an overview, they're saying at year end, that plant or that land, I don't know what was that example there, it's no longer 800, but it's 850.
Yes.
So if I go to my rules, you're saying if you want to remove someone, basically now we want to replace 800 with 850. So the slides that's on the board, we look at number 2. We're saying we can only remove land with a credit entry. Can you see that? Are you writing down?
Okay, let me write down.
Guys, always have a pen and paper. You cannot always grab everything by listening. To follow, to make sure you just follow.
Okay, sir. So you said,
when you look at that slide that is presented, your number 2, you are trying to reverse that 800, meaning you're removing it because it's no longer 800. So how do I remove an asset? By a credit entry. Hence, number 2, it's a plant or land. It goes with that credit of 800.
okay,
Now they've given you that information to say, hang on, it's no longer 800, it's 850, meaning my books must show my carrying amount at year end being 850. So how do I put 850? You're bringing the value up. So how do I bring an asset up? By a debit entry. So number 3, you write plant revalued 850.
okay,
Can you see now the difference? Your debit and credit are not balancing.
yes,
Then you're saying which one is bigger than the other?
the debit
So meaning where does that 50 must go?
to the credit.
To the credit. There's your number 4. It's called revaluation surplus.
Okay,
So all of you guys did not pass this journal entry in that exercise. Hence, you started with number 1 in the class. All right, it's 9 o'clock. You can go to the next class. Almost 3 minutes. Are you clear now?
Yes, I'm clear. Thank you so much.
I know you're living here being a very happy person. So with this understanding, I'm coming back to say, where are the marks at? You need to understand what you are doing. So you need to find a way on how I'm going to do these things. So by reading at the suggested answer and not understanding what they were doing, you'll end up doing so many exercises, getting much more confused. Because you need to understand what actually am I doing the way I'm explaining it from that graph to this journal entry. Because there's a theory behind. The land is no longer 800 or whatever that asset we're dealing with. It needs to be 850. So you go back to the basics, the debits and credit. So this is how I solve my debits and credit. Hence, when I was saying is, if you guys move with 67% premises, forget about the speed, forget about finishing the exam. But whatever you write should not be wrong. That should be the policy we're using. Once you start, pick up the pen and write, nothing should be wrong. It's obvious you're not going to finish. That is given. Make peace with it. Majority of you are saying we are slow writers. There's no way I could have finished. That is okay. I've been in your boat all these years. I don't write fast. I've never finished accounting. But whatever I'm writing, it's definitely not wrong. All right. On investment property, I think we're moving towards the end. How we deal with that? If it's a property held for sale in the ordinary course of business, you know, once you're selling that and you're selling property, it will be an inventory. Yes, you know, IS to do that. If the answer to that question is a no, you ask again, is it an owner-occupied property? If the answer is yes, you use IS 16, the PPE standard. Then the policy, it could be either on cost or revaluation model. But if it's all these other things, if it's not an owner-occupied, then meaning it's going to be the investment property, then you just check on the other requirement to say, is it developed for future use? If the answer is yes, then it's going to be an investment property. And then you apply that fair value modeling. It doesn't go to OSI, it's a fair value adjustment. All right, we're not recapping on this for now. I wanted to bring those journals and we've covered this. I think I started here on Thursday. The increases in OCI and then the decreases all that I did in that graph. Sorry,
Mr. Molefe. So just to clarify, if it's for owner use, it's OCI. If it's for investment, it's fair value investment.
Adjustment, yes, you pick up those things. So you're reading now, can you see, it's gonna look for those things you just mentioned.
Yeah.
then you know how to account. Because should you miss that part, your accounting will completely be wrong.
Exactly. Yes. Thank you.
How are you guys feeling now?
Much better.
Sonia,
Thank you.
Sonia, can you please repeat what you just said?
Okay, so if it's owner used, I mean owner occupied, then it's OCR calculation. And if it's not owner occupied, so in other words, the owner bought the building or bought the land, but it's occupied by someone else, so then it becomes an investment property, either earning rental. Then it's a fair value adjustment calculation. Is that correct, Mr. Molefe?
Guys, I want you to do that. I'm going to do one more thing. You might be slightly frustrated, but is that last and you do last? Darlene, I think it's true. You Sonia 2 and 3. We're coming back to that. Do you see how you do the journals? That 30 marks, meaning you had to do a lot of things. Okay.
Yeah.
Any other question? Don't worry, you're almost there. Once you finish this and you get it consolidated nicely, you're done.
Mr. Molefe, this reevaluation one is actually quite easy as long as you choose the right calculation. Then it's a nice easy mark, isn't it?
It should be. Remember what they're going to do in an exam. Like you were explaining earlier on. You need to say, 1, I need to get the owner occupied. Then you get your heads right, that here I'm dealing with revaluation. Okay, that will be in one question. Then you're gonna have the investment property. It's just a movement from 800 to 850. Fair value adjustment, no stress. Okay, so you need those 2 schools and run with all of that. Now, but once it's an owner occupied, you need to know there's lots more work to do from the general perspective.
Why is that? Because it's an extra journal entry because of the surplus. You have to account for the surplus.
Yeah, understanding, yes. Because I want you to be able to simplify 2, 3, and 4 nicely.
So if we were to do an investment property, what would the journals be then? So if you use the same example we did with the 850 in the assignment question.
That's a good one. I was wondering why you guys not answering that. It's simple. What goes up is your IP. So you debit IP, investment property, and credit what? That extra 50 to fair value adjustment.
Okay, so you would debit, sorry, say that again. You would debit
investment property, IP.
Okay, so instead of plant at cost, or you would say investment property.
Property, because it's going up. It's an asset. Remember, don't forget my debits and credit rules. You always need to have them handy and master them at the back of your head. Yes, it's an asset, it's going up. So how do you bring that 50 up? You're pushing your investment property up by debiting investment property.
But would you debit your investment property by 850 or just 50?
No, 50.
Okay, so the journal entry then is investment property debit 50,000.
Yeah.
And then fair value
adjustment
credit
50,000.
50,000. And that's your journal entry.
Yes. If it's investment property.
Got it. Thank you very much.
But you're not done. Hang on, don't.
Okay.
The very first one that we did 2, 3, and 4.
Yes.
Then you need to take that to the note now. That's your last step.
Okay, so this journal we have to take to our notes.
Yes.
Okay, and on the bottom of our notes we would say the property.
No, it's not investment property. You start with the owner occupied.
Oh, okay. So because it's owner occupied, you put the owner occupied in the notes.
No, both of them will need to go to the notes. What I'm saying is, if they don't ask you the journals, you need to be able to look at those 2 journals that you've written now the 2, 3, and 4, and the investment property 1, and be able to read from there and take it into the note.
Okay, so the way I understand what you've said now is you look at the question, you establish if it's owner or if it's investment.
Yes.
Then you look, the second question, you look at the question, you say, are they asking for the journals? If they don't ask me to do the journals, I know that I must then put it in the notes.
Yes, but in your calculations, you will have that note that has 2, 3, and 4. Do you see that one?
Yes, so you still
I'm
have
requesting you now to take it to the note.
Okay, so in the exam, you'll still do the journals because you need the answers, and then you take it to the notes because they don't ask for the journals.
Yes.
Okay,
Or
got
if you
it.
are very fast now, you don't do those journals, but just those movements. But take now, the requirement now is take what you've written there into the note. I'm
Okay.
listening to you to take me through.
Yes. Okay, so then I take it through to the notes, and in the notes I will say that the property was valued at the initial value of the property was 800, and now in this year it's valued at 850.
Wait, you don't rush. Start with that 800. I count it in a note. I'm listening. Go slow.
Okay, so in my note I would say property value at this date is 800,000.
Yeah.
Re-evaluated at this date.
We're having the opening balance and carrying amount. Now your mind changes back to that story if it's PPE.
Okay, no, I'm confused here.
Don't confuse. Look at that 2, 3, and 4.
2, 3, and 4. Okay.
Journal entry.
My journal entry of 2, 3, and 4.
You remember those one? 8, 8, 50, and 50.
Yeah, I'm looking at it.
800, what would it have been? It would have been the opening balance.
Okay, so my plant at cost is my opening balance.
Yes.
Okay, let me write that next to it. Right, so opening balance will be 800,000. So then do I say that in the note? Opening balance.
But remember, there's a structure for the note, that framework. The structure will have prepared it, your 800 will go there, remember?
Yeah.
That detailed note, the detailed note we did as a skeleton for the other class example before on last week one, before Thursday's one.
Okay, now I think I missed that class, so.
Oh, okay, that's fine.
Yeah,
but
I'm
carry
still
on.
trying to
So
catch
that
up
too will go
with
to the
pictures.
opening balance, carrying amount 800.
Right.
Somewhere in the middle, you're gonna have that revaluation surplus. Remember that.
Yeah.
That 50,000 goes there.
In the structure of the note.
In the structure of the note, correct.
Okay. So I must go back and make sure I understand the structure of the note so that I can fill this information in correctly.
You are preparing it now, Mosagir. Do it. I'm taking you through it.
Oh, okay. Yeah, but I don't know how to structure it. So
structure it anyhow there quickly so that you see. You're gonna have in the page.
So in the notes, I would structure opening balance, 800,000, and the date.
Yes, then you leave that. Further down, you're gonna have a revaluation surplus.
Yeah, then I've got the revaluation surplus with a date of 50,000.
50,000. And then your closing balance at the end.
Oh, okay. And then my closing balance at the end would be 850.
It would be 850. Yeah, that's what you'll do.
Oh,
if you are
so
not asked journals.
Ah, okay.
Then that consolidate everything now.
So that would be all the information you have to put in this question because of in the exam to complete that question, and you get a mark for each step.
If they ask you for, let's get this one right. If they've asked you to prepare the note, you'll do it that way instead of the journal entry we did.
Yes, got that. Thank you. Yeah, thank you.
Let's get with that concept right. I think Joanna was trying to explain it. But let me just edit and clarify it one more time. I'll move from a concept explanation of how this depreciation capitalized move works rather. So what happened is you've got the asset. The only way you de-recognize the asset is when it is destroyed or you're selling it. But this, any further keywords they're using there, it's saying is you are withdrawing it. If I'm withdrawing it, is that a disposal? Let's participate to get the concept right.
No, it's not.
It's not. So that asset, you need to depreciate it normally because it's there. Regardless that it's not doing anything, you didn't sell it, you've withdrawn it. So you need to first do that full year's depreciation. Okay. That's your first easy journal entry, you need it. But there is a problem now because they're saying now, number one, I'm calculating the full year's depreciation. Then they come to, hang on, I need to withdraw this asset for 4 months. It could be for 3 months. You need to like those two numbers. To use it to construct another asset, it could be machinery and equipment, I think in this case. Now there is a problem. We're saying, okay, if this is the case, because this asset is not being sold, meaning the depreciation should have taken care of for the whole year. Now UNISA will come to say, no, withdraw it for 3 or 4 months. You need to be comfortable what it means. Let's simply say on the depreciation you just calculated, take either 3 or 4 over months, we'll get to the actual example now, and then remove that part of that depreciation and make it the cost. So now you're getting this new animal. So that 3 over 12 or 4 over 12, it needs now to be part of the cost for the new asset you are building. So hence when I'm saying is that depreciation capitalized, the first bullet, are the future economic benefits embodied in that asset absorbed in producing another asset. So you'll be using that asset for the purpose of another. But now the methodologically says now, I need to get part of that period I'll be using it and take that as part of my new cost, inverted commas, to be part of this asset I'm building. Do you guys understand that explanation?
So, Mr. Molefe, are you saying the 850 and the 425 we must add to?
I'm not on figures yet. I want us not to concentrate on figures, to understand the concept.
Okay, then I lost you.
I know you guys are excited about the figures. We're getting there. That is the problem. You're not getting lots of marks. Depreciation capitalized. Let me repeat it one more time. Everyone listen attentively. You've got one asset. I don't want to refer to an example. I'll get to that so that you notice, say, this one asset is always been there. Thank you. What I need to do, calculate the entire year's depreciation because you're not selling it. That's your starting point. But call this asset A. I need it to do asset B. So you need to get to asset A, get the full year's depreciation first. Then they tell me the story. This asset B will take me either 3 months or 4 months to complete using asset A. So you're saying, I need to take the 3 over 12 or 4 over 12 of asset A's depreciation to get the new cost for this asset B. Then they will tell you that maybe you've used some materials and labor. That is the starting point of a theory to understand. Before we get into that question, do you guys understand that part?
Yes, I do.
Without the figures.
Yes.
Yes, I think I'm following.
Now let's get to these numbers that likes to confuse you guys. There we were at, is it another class exercise we did? COVID LTD. All right, let's get to that. Let me take you to, we'll come back to the 1 and 4, so whoever's got a problem. I want to explain the previous slides that I've got. We want to concentrate on note 1 as well as, no, I mean rather note 2 Does that fit with the question mark? As well as note 3 and those ones. Okay, saying fine. Let's go there. Check how I'm reading number 2. After expansion of operation in office building, the office building was completed and available for use 1st December. The following expenses were incurred in the offices. What were your journal entries? This is another easy mark. Did you guys get that? When you incurred, meaning you either have paid them by bank. What were your journal entries for this?
We debit the building offices 450 plus 150, and then we credit the bank or liability.
Did you guys get those marks? All of us?
50 plus 150, yeah.
Sorry. So I just want to know if, because what I did is I combined them. Would I be wrong if I combined them in my calculation?
Your calculation has to be correct. There's nothing wrong to debit labor, debit materials, inverted commas in that, and show the total of how much is it, 600. Guys, please just mute. I'm presenting. You need to mute yourself if you're not talking. Thank you. No, you wouldn't be correct. You wouldn't be incorrect, but you need to show the 450 plus 150 in your calculations.
Okay, thank you.
And then you've got 600 combined, and then marked clearly to say where you got it.
Okay, thank you.
Okay, great.
So yeah, Mr. Molefe, I did that, but I didn't show it. So I added it in my calculations, but I didn't show
The journal entry.
Yeah, the journal entry where you add in the 450 and the 150.
But the exam had 30 marks, and is that. I'm just trying to show you guys you don't need to lose easy marks. I know where you're going with that, but you start there.
Hi, team and Mr. Molefe.
Yes.
Okay, on my side, I've combined both amounts, and I said building 600,000 and bank or payable 600,000 on the credit side and the debit side. So do we have?
It's like Linda, but you need to show. Remember my approach, which should be your approach in an exam. Remember, now I've written so many exams. So you don't show this calculation on the face of the journals. There were those ones that I keep doing that. Remember, we said we got page 1 and 2 for our journals. Now, your concentration on doing all the work you're doing is under calculation column, where you're saying maybe C1, 450 plus 150. You get 600. Whatever you put in a journal entry as 600, it must be referred back to C1. I'm happy with that, however you do it. But you must tell the marker where you got the 600, because there's no 600 in number 2, there's 450 and 150. Happy people? Let's move. This is not a difficult part, it's just to say don't forget to get this easy mark in this journal. The problem starts with number 3. This is what I was just explaining now. This COVID company withdrew the machinery and equipment from the normal production for the period of 4 months during the current year from 1st July. It's very important to pick up that date.
Mr. Molefe, why would we have to take that out of depreciation if the machine is actually still working, even though it's working on building the building, but it's still working? So surely it still gets its depreciation.
Park that thought. Go back to my slide 3. I think it's going to come up now. What was I trying to explain earlier on?
Okay.
To say you need this asset. There's nothing wrong with that asset. The first work is to calculate that entire year's depreciation. There's nothing wrong with that. But for the mere fact that you're saying is, there's nothing wrong to say I can use 4 months of this machinery to do something with it.
Yeah,
to
yeah.
find it useful for that other purpose. So you're not selling it, it's there.
Yeah.
But you need to use it to build that asset B I'm talking about.
You need to use it to build the asset?
No, in my first example that I was giving, let's just go to that slide. I think I'm there. this,
Where it says factory and office building question mark.
yeah, I'm going there, 1 second. That one. Yeah. Yes, we'll get into that.
Okay, so to answer that question mark, you're just going through that point of taking it off for 4 months.
For 4 months, yes.
Okay.
So what am I taking? You're taking, in this case now, we're putting it into good use. I'll just get it right now. We'll get it from that 3 million. So we are using what in this case? We're replacing with their actual question, that slide 3. That asset A being the machinery and equipment. There's nothing wrong with this machinery. All that I'm doing is I need to get the depreciation for that 3 million for the entire year first. That's where you start. Remember, that's what I said with asset A.
Yes, got that.
That note 3. So your first work you had to do was to get that 3 million year depreciation. How are we calculating the machinery and equipment? At what rate?
20% reducing
20%,
balance.
yeah.
That's fine. If it's reducing balance, you can look at what? Carrying amount. What is the carrying amount?
3 million minus 1,080,000.
Not to be fast. Is everyone on the same page with that?
Yes, I agree.
Remember, we did the diminishing balance on Thursday in the class. Then you multiply by
20%.
20%, isn't it?
Correct.
What do you get?
384.
384. So all that I'm saying is, of this depreciation of 384 for the whole year, I need to get 4 months of it to make it the cost.
Sorry, are we not supposed to pass the journal first to debit the depreciation of 384 and credit the accumulated depreciation of 384?
You are too far.
Okay.
I want everyone to understand this slide. What I said is we calculated the depreciation for machinery first for the whole year. That's my first bullet there, which is 384. But now we're saying, hang on, with this machinery, I need 4 of the 12 months to be my cost for the new office building that I'm doing. Do you see where I'm going with that?
No, I don't.
Yes.
I don't understand why the depreciation has to be altered for those 4 months.
No, it has to be, because remember, it was withdrawn for 4 months.
Sorry,
For
say that
depicting.
it has to be because it was what for 4 months?
It was withdrawn for to build the office building for 4 months. So
Yes.
now we need to calculate our depreciation that is capitalized. So Mr. Molefe, what he's trying to say, I think, if I understand properly, is that we calculate our full year's depreciation.
Yes.
Then we get the 384,000. You are right with that. Then
Yeah.
now we are given in the
Yeah, I
question
get
that
it. 4 months.
4 months. Yeah.
So you
So
take
we need to take
84, divide by 12 to get, and then times by 4. But I
Yes.
still don't understand why are we playing with
Let me
depreciation for those
let
4
me
months?
explain. It's the concept of capitalized depreciation. How do I explain it? Let me just look at that.
Okay, let me
Let me
explain.
just thinking. Now I want to bring it to a simple understanding.
Yeah, because in my brain, the machine is still working. So why are we capitalizing?
Let's look at. You could have the machine. Say you've got 2 stores. One in Johannesburg, maybe another one in Centurion, that you use for baking.
Okay.
You understand?
Yes.
You got a machine that has a capacity to service Johannesburg and Centurion.
Right.
Will you go and buy another machine?
No, I'm going to move the machine.
You can move a machine. So all that we're doing here, you've got this full a machine in this example that you can use to build something with it. There is nothing wrong with that.
Okay.
So here what we're saying is the cost for these machines, they are fixed by its nature. But because now I'm taking some of it in the form of that depreciation that I need to bring it up as part of my cost for this new asset I'm building. That's all that the concept is all about. There's
Okay, so
understand.
I think I understand now. So what you're going to do is you're going to take those 4 months cost and add it to the cost of the building.
Yes.
Okay, I've got it. Sorry, I've got it.
No, it's all right. You've got all the time to understand. It's very important before you get to the figures.
Yeah, I was getting confused because I thought you were going to deduct it from the depreciation, and I'm saying that the machine's still working. So why are we deducting it?
We're coming
now I
there
understand you are going to add to the building cost.
And now deduct it because that 4 months was not for that purpose. It was for something else.
Yes, and you can't double claim that cost.
You're an accountant now.
Thank you. Boy, I got it.
I'm glad you're getting it. Let's just move. So we've got that. Forget about the journals, the step-by-step process on that. Now remember that 450 plus 150. So what am I adding further now?
We are adding the depreciation that was capitalized, which is 128, 384 times 4 over 12.
Is everyone happy with that?
Yes, sir.
Yes.
You pass another journal end. Remember the two you did separate that 600. So over and above the 600, you're saying now, hang on, my actual cost needs to include this 128. Is everyone happy now?
What I'm saying is that I was following when you were explaining the capitalization, and I calculated the three answer that we had, the carrying amount, and then from there I got lost because a lot of information was said, so I was confused.
You can't. That's when you raise the hand and do that. Where did we lose you? Let's explain it further.
Okay.
Just listen. Let me explain one more time. We had 3 million. You've got. Are you writing down?
Yes, I'm writing down.
You've got 3 million minus that 1,080,000.
Yes.
You get the figure. You multiply that by 20%.
Yes.
What did you get?
Let me calculate.
But you're not calculating. You should have calculated so that you know where you lost. That's fine. Calculate fast. The others are listening. Maybe you lost when Tapsing got lost. The 3 million minus 1080 must be 1.92 million. You multiply that by 20%.
20%.
Yeah. What do you get? 384,000.
Yes.
What is that?
It's the carrying value.
No, it's a depreciation. The carrying value is 192,000.
All right.
That's a depreciation. So the discussion that has been taking place is to say now, we've got the depreciation for the entire year for this motor vehicle. I mean, machinery and equipment.
Okay, sir.
Okay. What we're saying is it was not used solely for the purpose of machinery and equipment for 12 months. We stole 4 months of that to apply this depreciation to build the new office building. So we need from this 384 to take 4 over 12 out.
Yes.
Okay.
But I understand.
How much do you get now? 4 over 12 times 384.
128.
Let me go back to that slide. This 128 is bullet 2, the depreciation charge that must be forming part of the cost of this new asset that comprises of the labor of 450 and 150. What was it, labor, if I got it right? The 450, and there's that information number 2. So it must be added to labor cost of 450 and the materials of 150. So you're adding now 128.
Well, I'm adding to the expenses.
Not an expense, you are building an asset, office equipment. So yes, you're adding to those expenses to get the cost. Remember when I touched the investment property, if in the property, plant and equipment, The cost comprises of number of things. So we are in that part under recognition.
Okay.
Are you with us?
Yes, I'm following now.
There is 19 years zero, that depreciation of 3840 you calculated now, Tabise. But we say, hang on, we withdrew it for 4 months. Then we need to get that 4 months to be added to that labor cost and material. How we will do that? That 128, the 38444 over 12. Okay. The constructed office building will comprise of labor costs, material. Now you bring in the depreciation capitalized. This is how your answer calculation needs to be presented. I don't know if it's 1 or 2, if nothing I've seen like this, so that the thinking must say this to you when you show the calculation. Get that? The total cost of the building, of the office building, is going to be 728. So you spend lots of time on the calculation page to come up with that figure. That is non-negotiable. Are you happy? Did you guys get the 728?
Yes.
Yes.
Yes, sir.
Then from here,
Yes.
you do your simple accounting. I like more yes now. Then
Sorry,
the simple.
Mr. Molefe, I lost my concentration there for a minute. Yes, okay, so I got it. You added the 128 to the 4651. No.
It's 450, not 650. Just correct me there.
Yeah, it's 450 plus 150.
To get 600. I
600
think
plus 120. Yeah, okay, now I've got that. Thank you.
that's what happens when you work in the AMs. All right. But now you go back to simple accounting. Now I've got the cost. So in this case, remember, if you look at that example, they keep giving you the cost. But the depreciation capitalized, it wants you to determine the cost. That's why you guys finding it difficult, because you're not given. Hence those question marks there. Then from here you move nice. You say, okay, now I've got the cost. If I've got a building, the policy says it can be depreciated at what percentage?
2%.
2%. But now you need to be smart. From when?
I think it's 7 months.
Get the date. When are you dangerous with it? And be quiet. Your months sometimes are wrong. I said park yourself, not unless you're asking. I want everyone to participate. Who is not participating? When I know you got it right, don't stress.
Ash, no, Mr. I got mine wrong because I didn't add the 128 in.
You're not the only one. It's okay. It was an exam, remember?
Yeah, I saw it. I saw that.
Okay,
And
Sonia, let's also
strict
give the
question.
other chance. I don't want to leave everyone behind. Thanks, Tabseng, for coming up earlier on. The others, what are you saying? Because if you're quiet, I'm worried because you might be lost. And once you get quiet, you might be even more lost once you leave this class. Okay?
Mr. Molefe, and class, isn't the months 8 months instead of 7?
Remember what I said in the class? Either way, it depends how you calculated that. We'll get to that.
All right, okay.
Because remember, once you're in an exam, you're not marking yourself if it's 7 or 8. Whatever came first to your head, you'll go with it.
All right, okay.
Penalize your ones.
I will listen, okay.
Great. Who else that's lost? I don't want to leave everyone, hence I'm slowing down a little bit. Now that is how you calculate the depreciation of this. You get the 728 at 2%, you get this 14,000, you multiply that by 7 over 12. So if you've got 80, it's wrong. So it's 7 over 12. Then we're saying this is a depreciation.
Please, can you just elaborate on the months, please, for me, for my understanding?
If it starts in, what was the year end? We need to go back that one. It will take me long. Assist me if you
June 2020.
When did we get this building ready?
January 2018.
But remember, we constructed it for 4 months, so it wouldn't have been available for the whole 12 months, isn't it?
Yeah.
But that 4 plus 7 doesn't tie. Then the depreciation, it starts when it's brought into use. When did we start using it?
after the 4 months, after the 4 months of construction.
The exam will have told us when we needed to start depreciation.
Yeah.
When was it available for use? You guys
One
had
available
1st of January 2018.
when was it?
On December 2019.
January 2018.
Yeah,
Oh, the
December 2019.
Guys, you're not reading carefully. Go to your number 3. You've got it on the short screen. Why not? You needed to be on number 3. Can you see how far I must go? I'm presenting. We are on number 3.
Okay, July 2019.
There's a July 2019 used to construct that, isn't it?
Yes.
But when you look
Yes.
at number 2,
Two.
office building available for use, that's when the depreciation kicks in. 1st December.
Yes.
2018.
No, 19.
2019.
1st January.
Okay, all right, okay.
Remember, this is the extension. They added on the expansion.
Sure. Okay, thank you.
That's what we do in an exam. Can you see how it is sitting? You've got 2, it's red with 3. Okay. It's okay. Highlighting.
Sir?
You don't have a choice. You need a highlight. Yes,
Can I please ask before you carry on?
sure.
The information says that the machinery was withdrawn from the 1st of July for 4 months.
Yeah.
So if we count, we are going to say July, August, September, October.
No, left
Right.
that one here.
So that gives us 4 months until October. Then information number 2, it says it's available for use from December. What happens to November?
It doesn't matter. It was not ready. So you've got an asset. Meaning if it's not yet starting to use, if it's not available for use, you don't depreciate it. It's not ready. It's not in your books. Good question.
So it's just idling. Nothing
Yeah.
happens to it.
Does
Oh,
happen. If you've
okay.
got 2 cars, you can only drive one, isn't it?
Yes.
Yeah. Then the other one
Okay,
will
thank
idle, but it will idle.
So we used 8 because of that, of
No,
the
no.
November. We included November.
You
Thank
got
you.
it wrong. The principle, let's correct it now. You don't have to get that one wrong, because that is what will fail you, because they say you don't understand when the depreciation kicks in. So there was a very critical information in number 2. Available for use on 1st December. So if you are at 49 and you use 8 months, you're gonna repeat the course if you don't get a deferral.
Thank you, Sam.
Thank you. Let's fly. Paseka, was that you, ne?
Yes, sir.
Great. Anyone else? Okay, we're gonna catch up with the speed. We got everything almost there. Can you see how much time I spend on calculation? Forget about the journal entries, because if it's not written down, there's nothing you're going to journalize. And the way Rico Tanka thing, that is how it moves to the journals. Because that building up from 3 million to that withdrawal, you need that thinking process. You see how many marks are there? I have 2, but I haven't journalized it because I know I've got these marks. There is no way I'm not gonna get them. There's that story with that brings them the 1st December. You count from December, it becomes 1 month plus the 6 months of Jan to June. There's that depreciation. So you see how many marks I've got? There are so many. I've got 2 for that depreciation. I've got 1 for that 128. I've got that one that you started with at 600. So we're gonna move to journals now. Not this one, we've covered them in the class. Can you see how I'm passing my easy mark first? Debit labor cost, debit material, credit bank. You guys wanted to go to the calculations to get that 600, which I did for you. There it is. Can you see where it goes? So remember, we started with that 600, that note 2. That's where I'm at. So you need to get this 1 mark. It shouldn't be a stress. But you say now, they are addition to the construction of the building. Remember, the machinery and equipment is not derecognized. I've touched base on that. It's just withdrawn for the construction of the building. Remember that depreciation for the whole year, that's 3 million minus that 1080 million at 20%. I need to bring it in. It's a depreciation journal entry for the whole year. Okay, but I'm going to do something with this depreciation. 4 months of it needs to come because I've withdrawn it to build the construction of an office building. That 128, it's added to my cost, debit office building, and credit that depreciation. So you see what I'm doing with that reversal 6.1 and 6.2. I'm doing the reversal because my depreciation is not 384 because for 4 months it was used for another purpose. This debit to the building because it's an addition to the building. Then I'm reducing my depreciation, the one that I've counted in 6.1. It must be 128 less. Okay. Because in 6.1, we had the entire year's depreciation, but 4 months of it, this machinery was used for another purpose. So you get those marks. Now you're gonna go to the not so easy marks, where because if you look at 6.1, I said debit depreciation and credit accumulated depreciation. So I need to pass another journal entry again in 6.3 to say that 128 needs to be reversed on the accumulated depreciation and get depreciation capitalized. You guys did that in the note. This is how you pass those journal entries. And you guys missed that. It's not a so easy mark. Now, depreciation capitalized, don't forget to reverse the one that you've passed earlier on, because normally you will say debit depreciation and credit accumulated depreciation. Normally, that's what you'll do. That's what we did in 6.1.
Sir, please slow down. You're moving too fast. You're moving too fast.
Where I
Slow
lost
down
you.
a bit.
The reversal of the 128.
Okay, on to okay, that's fine. Let's carry on there. It's from my calculation, by the way, again. So we're passing journal. So you're happy with the 384?
Yeah.
Where there is no capitalization. Then you're saying, hang on, but 4 months, I needed that for that 128. So you're just decreasing the depreciation expense to be accurate. You push up your asset, being the office building, in 6.2, and then you reduce your depreciation. But I haven't done anything as yet with accumulated depreciation because it's overstated by 384. If you look at 6.2, I only touched depreciation. So meaning for accumulated depreciation, I need to pass another journal entry. It's not a so easy mark. You might not get it in an exam. It's okay. This is that part I'm saying, not so easy marks. Where I reverse the accumulated depreciation, meaning I must reduce my accumulated depreciation by 128. But where do I take that? I'm creating the new asset called depreciation capitalized. Am I slow enough?
Yes, it's fine.
That's it. Let's move there. Now you're dealing with the elephant in the room. Being there, 450 plus 150 plus 128. Now you're dealing with the depreciation for the newly constructed office building. That's C7. 7, I think it was 728 multiplied by 2% with the 7 over 12. Debit depreciation and credit accumulated depreciation. That's my story, and I'm sticking to it.
Hi, sir.
Yep.
Aren't we gonna be overstating depreciation because we've credited the depreciation on the when we're debiting the office building?
I'm
on
worried.
the depreciation
Yeah.
capitalized, we have the first we have the first credit of 128.
You are
and
lost.
then now
Let's
when we're
get that.
debiting the IQ.
Park there. You're getting lost. You're getting lost. This 128 is coming from the machinery. It's got nothing to do with office building. So you're going to have two separate depreciation. One is relating to the machinery and equipment. Hence, we are trying to adjust it with 6.3 and 6.2. Let's get there. We said debt depreciation, be careful, it's for machinery, not the office building. So we are not doing that. So the 728, this 450 and 150 and 128 is the new asset. So definitely we are not overestimating it or doing the depreciation. We've done that. So now this is a new asset, the elephant in the room, being the office building. You happy now? The 128, it's not a depreciation, it's a capitalized cost, which must be depreciated. Any other question? Yes, Pascal, was it you?
So just correction, your journal 6, it must be 84,933.
Which one?
The last one, the very last one.
Must be?
You said 8,000. Yeah, that one is 8493. It must be 84933.
933. Must be
Yes.
8?
4933. You must add a 3.
Is it? There's another 3. No, I
Yeah.
don't think so.
Oh, it's not. That's incorrect. The 8493 is fine.
Fine, we'll go to the calculation. But if you clearly done that, the marker will see what you were doing. Extra 0 might make a difference. Can you see it's clearly marked? So I needed to come here. So I'm taking this. Can you see it's correct from my calculation? Don't fight her. If your C7 or whatever calculation gives you that amount, your journal entry should show that amount. The principle is correct. The figures will penalize you once we move on.
Oh no,
The 14,
I'm actually wrong. I used 20%, not 2%. So yours is correct.
no,
Sorry.
you will be capitalized once that it's done. But what biggest mistake you'll have done is the rate that will have killed you. So they mark the rate, they mark the period.
Okay.
So if it's 20%, you're right. But in this case, it's 2 for office building. Just be extra careful with the rate as well. Can you see the expensive mistake you can do? Because the only 20% available was for machinery and equipment. They will say, okay, he took the machinery, I think you got confused. So they can't think for you on what they are seeing. They'll say this rate part is for machinery and equipment. Guys, Askisa, I had to do this. It's not nice. But now this you get into it, it's between the 75% and 100. You don't stress if you don't get. Remember, some I've written them not so easy, Mark, because they are not easy, especially with that C7. But my target in an exam was just to be on the top 25 of an honors class in UNISA, and that was it. I didn't have to get 100. I didn't have to be number 1. I ended up in the top 25. That was sufficient for me. So all that you do, there will be a point where you don't get. So this mark in an exam, if you can't get through that, anything has to be correct if you can't get here. But if you start with this, it might be suicidal because there are lots of easy marks that are somewhere there that I'm expecting you to get. All right, let's start with this journal entry so that you see it one more time where we moved on how I want you to do that. I want you to start getting into the easy mark. First, while you're digesting, maybe you'll come back to the depreciation cost. I started with number 4, where I do that at debit trade-in vehicle was an easy mark for me to grab acquisition of a motor vehicle and bringing it into my books. From there, what I do is a new one. I go with it depreciated 20%. I'm happy at cost. Straight line method, no stress. You guys remember you did that land revaluation? You guys did that for 50. But in the class, what I said you could do, you could have that, was it $1 million, I think? You credit that $1 million and put up the land at 150 to show the 150, but you could have done it this way. So you guys did this shorter cut. Fair enough, it's easy, Mark. Do that. Because land So one of the assets I'll look at it as equivalent to that investment property, that fair value adjustment. This is correct. It'll give you all the marks. And what I did there on C3, there was another depreciation. This must be for the asset that existed. And I think we've done with that 48,000. You let me know if you, I just can't remember from the top of my head which one was on that. I should have done the calculation. Let's just quickly go to my calculation just to
88,000.
That's fine. That's not a so easy mark. I know where that 88,000 is. You could easily miss that on that. Because what you need to spend most of the time is to unpack, I want to go to the calculation, to unpack the additional information.
Mr. Molefe?
Yes?
Can I ask a question?
Sure.
If we, the way you do it with the journals, usually previously I will use like a ledger, using like a ledger. I don't know it is advisable to do that.
No, but the required here was the journals. Ledger and journals is the same thing. But where I want you to go, there it is. You spend most of your time on page 3 where you'll say calculations. So what I was trying to say here, you need to do lots of the work where you solve additional information in a separate sheet to follow what you're doing. So you guys started with note 1, remember? When you read it, but I said in the class you shouldn't do that, but I know you guys did that. So that 1.5 million minus 150, you need to know what you're doing here first. Then you went to the factory building where you needed to calculate that depreciation. But remember, when you look at that date, when you've got all the time, you see, but this asset was acquired then. So meaning you ask, when is the next year end? When is the next year end? But we are in 2020. Hence that 48,000 in that journal entry. Show that. Because if it was a note, I need all this opening balance for my accumulated depreciation opening balance, the 18 and 19. So normally when I do my calculation, they are in detail in the event I'm asked the note. So the journal entry that you need for that 48,000 is the year 20, because you've already done year 19 and year 18. But if it was a note, you need this opening balances with this calculation. Hence, when you've got carrying amount opening or at the beginning of the year, it's these 2 marks. Then your current depreciation. Then 24 and 48 becomes your closing accumulated depreciation. Then I said we've moved with a new vehicle. It's another easy mark. Can you see they are under easy marks first? You start with the one you've acquired. You deal with the disposal later on. Once you've dealt with all the easy marks, you go to the not so easy marks. Not so easy, but you can survive there. The existing motor vehicle, that is that for that 88,000. You can easily miss this, but if you miss it, it's not the end of the world. Remember that 645 where we minus that 205 because there was part that was not disposed of, meaning we had 440 remaining of the motor vehicles that we can still depreciate. You can easily miss this in an exam, but if you've seen it, it's all right. Good luck for you. Then eventually you deal with that disposal. You need to attend to that trade-in. The trade-in was 205 at 20%. There it is that, and then it's for a specific period. It had the accumulated depreciation that was given with standard calculation. This was the last one that we did, the depreciation capitalized. Then you are better off. So break that additional information according to those assets, and then it shouldn't be too difficult. Guys, thank you so much for attending the PPE. It's in an exam. While the chat group is still on, don't hesitate to ask there, but we can move. All right.
So can you please send the slides into the WhatsApp group?
No, only if you've attempted the question, I will send it to you.
Okay.
I'll send the homework instead. How about that?
Homework
much better, so we can have more work, more practice.
I just need you to practice. But please spend more time on the calculation page that you can understand. Because with your calculation, the required could go either way. Do the note or the journal. So you shouldn't be stuck with either of the two. Hence, I'm the biggest fan of calculations. I've done my share for a day.
Thank you so much.